Good morning, everyone, and thank you for joining me in today's daily market review. This is Mohanad Yaoud, Head of Market Research at CJC Markets in the MENA region, and today is the 4th of March. Basically, we're having some choppy movements in the markets. The markets are not giving some clear trends that we could follow, especially on the dollar index, the euro, the pound, and other major pairs. We are waiting for today's Jerome Powell speech regarding the US Treasury yields going higher. We are waiting for tomorrow's numbers out of the employment or the NFP from the US. So the markets are quite waiting for any hints to initiate any trends in either direction. So let's check the charts. Let's check the technical analysis. Please stay tuned. Welcome back, everyone. So basically, let's start our day by having a quick look on the US dollar index, which is still trading basically in the upward correction or the upward channel that we did highlight in the past week. We are still heading higher as per the correction. However, we did have this high that we did create on the 2nd of March, the 91.39. Markets have seemed to be correcting since then. However, we are again moving on the upside. Basically, regardless of the technical view, the US dollar index should go higher, especially by the US Treasury yields going higher. We did have this upward surge in yesterday's Asian session. That's the 10-year notes. We did have this upward move that was yesterday. So this basically means a stronger dollar. We will be waiting for Jerome Powell's speech today regarding what's happening with the US Treasury yields. However, in the meantime, we'll be watching this key level, which is 91.39. That's our key level or the key resistance for this upward move. As long as we're trading below 91.39, we are bearish on the dollar index, even if this correction might extend to this high. So we are basically bearish on the dollar index as long as it's below 91.39. Any confirmed breakout above this level should be bullish on the dollar on the short term. Let's have another look on the euro dollar. Again, the channel, but on the opposite side, we did have this bullish candle on the 2nd of March. We are heading lower since then. On the 4-hour time frame, we are basically doing nothing since yesterday. It's only a downward move. So what we are expecting, or the key level on the euro dollar, is 1.1990. That's the key low that we should be looking for. As long as we are above this level, we are basically bullish on the euro dollar. Any confirmed break below this one, we will be bearish on the short term. The pound dollar has done nothing for quite basically 2 days on the daily time frame. We have had a doji followed by somehow a doji, another doji. So we are trading in a sideways range between 1.40 and 1.3860, a range of 60 pips, 40 pips, pardon. So we have managed to create 2 highs and 2 lows around the same range. This is basically something that you could trade on the 30 minutes time frame, a ping pong trade. Buy the bottoms and sell the highs, and we'll be waiting for a breakout in either direction, either by breaking above 1.40 or below 1.3860, and we will be continuing the trend in the direction of the breakout. That's for the pound dollar. Let's have a look on the gold trading. On the daily time frame, we are still heading lower. We do have our targets of 1690 roughly. That's the key level that we are waiting for, 1690 on the daily time frame. However, on the shorter time frame, the 4-hour and the 30 minutes time frame, we're having this some sort of a falling wedge, a downward wedge forming on the gold trading. The key levels for the day is $17.25 and $17.07 to the downside. If we have managed to break above this key level, we'll be heading higher during the day. We will be bullish on the short term. However, any break below 1707, we will be heading to 1700 and then 1690. That's for the gold trading. Let's have another look on the US Dow Jones. We are still basically trading in the rising wedge. We have tried yesterday or during the beginning of the Asian session to break below. The candle so far is indecision candle around this level. It's a bullish candle. However, we'll need to wait for the close of this candle. Let's have a look on the 4-hour time frame. So basically what we are looking for during the day, those are the two key levels, 31,000 to the downside and 31,660 to the upside. If we did manage to break below, we will be bearish for more extended losses to the downside. And if we manage to break above, we will be basically bullish on the Dow Jones during the day. However, we do expect a bearish move fundamentally due to the rising treasury yields. And again, we'll be waiting for Jerome Powell's speech today regarding what's happening with the US treasury yields. And this definitely should affect the dollar and should affect the risky assets, which is the Dow Jones is on top of them. So we'll be waiting for today's speech. Please be safe with your trading. Don't risk, don't overtrade. Thank you for catching up with me. We'll again be with you tomorrow. That was Mohanad Yaoud, Head of Market Research at CJC Markets. Thank you for watching and please stay safe.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets, smart trading.